Hey guys, welcome back to the channel. This is episode 2 of the Road to 1 Million, trading the only options wheel strategy. Recapping this past week, 9-5. Also, before we get into it, I just wanted to say thank you for all the support. I did not expect episode 1 to get nearly, I think it's sitting at almost 200 views now, 12 subscribers, and I think about 100 unique viewers, which is insane to imagine from the first video on the channel. So thank you guys so much, and for the one person that commented earlier, appreciate you. So I did switch the format up slightly, but overall, you'll see it later in the video, but overall, what is the wheel strategy? For my portfolio, what I'm doing is collecting weekly and monthly premiums, selling put options and call options. Ideally, I stick to this top range where the wheel starts, where I sell puts for a premium, and if the underlying stock does not go to the strike price, then I just keep the premium and repeat. But if it does get assigned, I am happy to own all these stocks at the price that I sold the put, and I sell a call, and then I just restart the wheel. And again, this content is not financial advice. Please consult a licensed financial professional before making investment decisions. So this is where kind of the format switches up. I will still be doing this slide, but I switched it very slightly with some word changes, as you can see from episode 1. And I'm not going over like trading rules and portfolio goals. If you're a new viewer, please refer to episode 1 to see those. But I think it's just honestly repetitive to talk about it every single video. But this is how the portfolio is looking. It's at $251,764 as of September 5th. I'm up 10.6% so far in 2025 year to date, which is $26,788. And I've had a pretty good week, 69.66% over the past week. If you do kind of try to follow the math on my portfolio, you'll see it doesn't always add up because I am putting money into the account and sometimes taking out. This last month, I took a vacation with a buddy to Europe, and it was pretty expensive peak season, and I actually had to take out $300 to pay for that. So, and no contributions this month into the account. But starting from next month, I will continue to contribute to the account from my 9-to-5 salary job. But this week was very volatile. The unemployment numbers came out Friday, which were very disappointing. But overall, the markets were red on Friday, but my portfolio was green. Earlier in the week, there were some I think it's the second judicial court ruled that Trump's tariffs were illegal, and the markets also went down overall on the news because the United States would have to refund all the tariff revenue that they've been getting to all the countries. But that seems to be getting resolved, and the tariffs are probably going to stick. But with that volatility, I welcome it as a trader, especially as long as we sell puts and calls on quality companies that we're okay with owning. And just getting into the realized trades this week, Spotify, $527. Root Insurance, $65. This is realized, not trades taken or the current portfolio, which we'll go over later in the slides. 2 HIMSS contracts, $320. Starbucks, $81. And then for my call options on the stocks that I'm currently holding in the portfolio that I got assigned while selling put options, Occidental Petroleum, $29. And Nucor Steel, $89. So overall, very happy and grateful that my portfolio remains over $250,000. So this is where kind of the formatting changed from last week. I want to go over weekly trades open so you guys can just follow along, and also go more into depth on closing and more visually, and how just my mentality is on why I open and close at certain times. So going on with the first trade is JP Morgan Chase. I I opened an October 3rd $290 put for 425. And again, just a reminder, this is an open position that I opened up earlier this week. And I'm a very big technical trader as long as the stock also has good fundamentals. But in this case, the JP Morgan stock, and this is just a trading view screenshot of kind of what I look at before I open up a position. Is there an earnings coming up during the contract term? So this is an October 3rd, so about 26 days around there until the contract expires. Sell at 50% realized plus if the timing makes sense. But overall, what I look for is an upward trend. This is a chart going from July to September with 2024 and 2025. And overall, I look at the 90-day simple moving average and a 200-day moving average. And it's in a positive direction. The stock overall long-term trend is trading up, but there are, some dips that we want to take advantage of. So there was a nice big red day that you want to sell puts on and you want to sell calls on green days because the premium is juicier. And the RSI sits at right at 49, which means the stock is neither overbought or oversold. There's some room to run. And $425 in premium for a 290 put. So we have a little bit of a cushion. And again, if it goes into the 290s, I'm happy to get a sign and take it from there. But very, very strong bounces off that 290 mark, and that's why I chose it. I mean, look at all of August. Every time the stock touched under 290, buyers came in, swooped it up. So that's kind of the trend that I'm hoping to see and collect some premium and income along the way. And also with JP Morgan, I mean, the fundamentals I really like. Their investment banking and trading desks have really grown strongly. If you look at their last earnings reports, 7% revenue rising 15% year over year in Q2 of 25, and also they've beat earnings 6 times. They have strong leadership. They're investing a lot into the company, and with rate cuts and potentially coming, especially with this last unemployment report that came out on Friday, I think this will really stimulate the banking stocks and continue this trend, as people have probably already come to realize since the April lows in this stock chart. So Peabody Energy, this is a company that I have owned for a bit here in the portfolio. It's a coal mining company, global, and I sold a couple calls. Unfortunately, not on this large green day that I think it was like an 8% rise, but I sold a call this week on 2 contracts for $41 in premium, and you'll see later how I'm currently down on the contracts. But again, happy to get exercise assigned or roll at the $20 mark and continue my wheel. But this is a high premium stock which has shown volatility, and unfortunately I did get assigned on this downturn, but I'm around break even. I think total I'm down maybe $300, probably less. I have not calculated, but not overall. I still have high hopes for this company. I'll continue trading them. So this is going into now realized trades over this last week, so you guys can kind of follow along to see where I bought and where I sold and give you guys an overall recap. So the blue line here is the contract strike price. So if the stock touches it or goes below at the time of the expiration, I would have to buy 100 shares at that stock price. So in this case, I had to put up $64,000 in collateral to gain that. I gained a total of $527, which I believe was about 70% of my max profit that I could. Bought it on the green arrow right here. strong bounce off that SMA. I like the trend, and it actually dipped a little below, so it was red for a few days, and yet my contract was still in the green just because of how the premium implied volatility went down, contract pricing went down, and that's very good for option sellers because I was collecting. Bounce off of the 200-day SMA, the orange line, and I sold right here, and I'm still very bullish the stock. I might enter in a new position. I like the candles. I like the overall trend. I like their fundamentals. I like Spotify came out recently with their AI powered. They want to integrate AI into their platform, their expansion to podcasting, overall revenue growth, user growth. I think they have about 30% market share in like the music and podcasting space. And also 2024 was the first time that they were actually profitable. So that's a very good sign for the company. Very well known name, and lots of initiatives underway that are helping grow and expand it. So fundamentals are there, technicals are there. RSI 55 sold, bought at around the 50s, so right in that middle. What I don't want to do is buy in the 70s or see where these greens 80s 90s. That's always, you're just buying at crazy valuation. So I try never to whenever RSI is near those levels, I do not open up any positions, any put positions. That's when you want to open up your call positions if you have it. Maybe closer, higher delta and closer to strike or more premium. HIMS, I sold 2 contracts. Very volatile stock, has been on quite a rally. Again, strong since February. There's always been a strong bounce over that simple moving average, the green bar, and it touched it here very briefly. My contract actually went in the money, but again, bounced right up. So this was less than a week trade and profited $320 for $8,400 in collateral. And just giving you guys some numbers, that's not what I sold it for, but 320 divided by 8,400. So this was a 4% return, and that was at closed at 50% profit. So very, very good return. Since if you watch my episode 1, you'll know that my target is at least 1 to 2% per month, and this trade gave me almost 4% in a week. So that's really good because of this nice rally, and I expect the stock to go up. I want to see how it will react over this orange line here. If it acts as a resistance or if it breaks through, I think I'll take another position. But in my other account, this account I only do the wheel strategy, but in my other account I do have some leaps, and I do have a couple leap options open up on HIMS that I'm growing. So a very bullish long term, strong fundamentals, but mostly a technical trader. Again, RSI was low, 40, was oversold when I opened the position and jumped up to 52 when I realized. So very, very good stock chart to trade, in my opinion, and high premiums. Root Insurance, bit of a volatile stock. They had a pretty bad earnings over here, which caused them to go down, and the stock's kind of been consolidating, trading sideways for that. And that's the beauty of the wheel strategy. You don't need the stock to go up or down. It can trade sideways and you'll still make money. So I closed my contracts at 50% profit. I sold 75 put, which is pretty safe delta, and I have a bit of a cushion here at clearly RSI in the 30s, which is great. Oversold stock. And again, trading sideways, less than a week hold, and the contracts were in the 50% profit, and I sold them for September 19th. So this was a good, nice trade that yielded some solid returns, and I will continue trading Root Insurance once the RSI goes back down and a little red day, but maybe it'll break down as consolidation. It has shown some resistance around that 93 area, but we'll keep an eye on it and trade, and I'll update you guys as we go. Starbucks also, I think it was about 60% of the value realized. Also, just a weak hold, nice little rally. Saw some support at around the 85 level, strong bounces. So bought as soon as the stock hit that level and realized, almost 50% of the contract with $8,200 in collateral expired September 19th. So I closed early. This stock I've been trading for a few years now. The premiums aren't as good as other stocks, but it also is not as volatile and still has long-term fundamentals and a brand name. So whenever I like the chart on Starbucks, I try to take a position. And $82 strike price, so also semi-conservative. Again, still targeted. This was about a 2% monthly trade if I held the contract full till expiry. So still a little higher in my rule, at least 1 to 2%. But I like the 82 strike because it has seen some strong consolidation around the area, and I think it's a very good sign that it's bouncing off that 85 mark. Occidental Petroleum, this is now switching to calls. So as you can see, the blue line is now above the stocks, and took a position about 3 weeks ago. So this isn't a weekly trade. This is one that I've heard, and the stock has gone up, and even my contracts went in the money for a few days, but a nice little pullback. So I realized at 50%, because even though there was 1 week left on the contract, I still realized at 50-60% because I think the stock is going to go on a nice run. So as you can see, this is again the beauty of the wheel. Even though the stock has been in an uptrend, it's been going sideways for since July, end of June. And I've been selling calls. I've been lowering my cost basis, collecting premiums. Stock goes up, stock goes down. I still make my money as long as it doesn't just completely rally in a short amount of time frame. This is the perfect setup for the wheel and selling covered calls. You're getting back to my cost basis and collecting premium as I go without it getting called away. But I will open up some new covered calls on this once it hits that kind of 48 or 50 area. Nucor Steel. This is a covered call that I sold, and steel has been rallying. As you can see, RSI has been above 50, hitting 60s. So a little bit in the getting to oversold territory, but still very strong fundamentals. I like the bounce back on the steel industry and manufacturing in general. So this was also about a 2 or 3 week hold. Did not hold the contract to 100%, but liked where my profits were and took them on a little pullback here. But again, I'll open up another call once it hits back in the 50s. I'll probably open up 160, 165 call because the stock has been rallying a bit since the May and April lows here. So current portfolio and how it's looking, closed a lot of positions, so it's not a full screen as yesterday. And again, the one number that sticks out is negative 5,700 as my open P&L. But again, this does not include all the premiums that I've collected from the wheel, and just goes to show how strong the wheel strategy is. I mean, Nucor, TLT, BTU, all these stocks that I'm holding that have these negative two grand, 1.5K. This is not including all the covered calls that I've been selling to lower my cost basis, all the puts that I have sold before getting assigned. So apart from Intel, I'm positive on all these stocks. Peabody Energy, I'm about at break even. So very happy with this strategy, and my returns speak for themselves. 10.64% year to date so far, still lagging the S&P 500 slightly, but I'm confident that we can pull through and outperform by the end of the year with my active management strategy. So some current open positions, you see some contracts are nearing that 50%, and some are down, like Sprouts. JP Morgan was a volatile week. I was up 30-40% on the contract one day after opening it, but unfortunately I had meetings all day at my 9 to 5 job and I couldn't close it out. But now it's negative. TLT's been rallying since the rate cut, so my covered calls are close to getting in the money. Waste Management, a bit strong bounce off the 220 strike price, and I'm very happy to get a sign because a lot of people just want to sell puts and never get a sign, and they freak out once the contract goes at the money or in the money. But I'm actually very happy to get a sign this stock. I see a free grand or two that I can get if I do get a sign on the stock, plus the premium collected, $315 waiting for me September 19th. So I'm closely monitoring the position and very happy with the long-term fundamentals. This is, again, why you only want to trade stocks that you are happy to own. So yeah, this week, or I guess next week, I'm looking to realize Palantir, BBAI, potentially Webull, since Robinhood got added to the S&P 500. I think some brokerage stocks will go on a rally. Webull, potentially one of them. BTU, again, had an 8% day. I'm down on the contracts that I just opened, so unfortunate, but happy to assign a roll once it gets closer to the October 3rd position. We'll keep monitoring how the stock will go, but again, with covered calls, you're profiting either way. You're just limiting your profit. You're basically getting rid of the tail end of the run. You're creating a ceiling, limiting your profit. But at the end of the day, profit is profit, and I'm happy to sell my 200 shares at the $20 strike price if come October 3rd it gets to that price. Occidental, I also received a couple of dividends. I mean, JEPQ, TLT, and Peabody Energy. So I also gained about $150 in dividends. This is why I like selling puts and calls and owning dividend-paying companies, because they pay either monthly or quarterly dividends that I collect and also lower my cost basis on the tickers. So with all my positions that I realized this week, I'm sitting on a lot of cash right now. About 40% of the portfolio is cash, and about 119,000. So also keeping an eye on my watch list, and we'll open up some new positions this week. So thank you guys for tuning in. Hopefully you guys like this new format a little better. And I actually did not update this slide, but we're at $251,000. So thank you guys for tuning in, and until next week.